great pleasure to welcome our moderator for the next panel, who is the Chief Operating Officer of 10x Investments, Caroline Naylor-Renn, who brings a profound understanding of this sector from a geographical perspective, because she's worked all over the world. I'm looking at your CV, Caroline, and you've worked, at HSBC Bank, Scandia, Old Mutual, 10 geographies all over the world, and so bring a really holistic worldview to this discussion. A warm round of applause, everyone, to Caroline.
No, the real topic for the day is around advisor tech and the future of investment platforms and LISPs. So obviously with Chris and Anton, you've heard about the Magnificent Seven and the impact of AI. I'm going to hopefully bring this a little bit closer to home. So we're going to talk about how the technology that advisors and DFMs use in their day-to-day practice are going to affect how they provide service to their customers. So I think it's an interesting landscape, and we've had a lot of technology and tools and software providers coming into this market recently. So I'm very pleased to have three experts to come and discuss that and share their views with you today. So my first question to the panel today is, how are you utilising technology, and what does your platform or LISP offer to the advisor or the DFM today? Maybe I'll start with Daniel.
Yeah, sure. Thank you. Thanks for having me. We, as an investment platform, I think what's important to keep in mind is a lot of what we're going to chat about today is the intersection between the platform and the advice business in terms of, how you interface with us, communications, online portals, all those things. But I think it's important to keep in mind that, the tech stack, as we like to refer to it in a platform, runs a lot deeper than that. So you're effectively from your core, the system that houses your financial information, through to CRMs and data warehousing, and then you get now you're sort of getting towards the outer layers of the onion, if you will. And then you start talking about your online portals, your communications engines, all of those types of things. And I think it's for us as a business, I think we could probably spend 30 minutes just on this question if you had to get into detail on all of those bits, but I think for us, those of you that know us will know that, that we pride ourselves on our service in terms of what we offer to you. Increasingly, that is tech-focused, and we've invested accordingly. So we've got sort of towards 200 people focused on software development now, across sort of testing, analysts, architects, all of that, all that crowd, and often we are investing in places that aren't necessarily only on that outer layer, but which very much underpin our offering to you, whether that's from a service perspective in terms of equipping our service teams. And then, of course, we still think, Allan Gray Online, or the online portal that you have access to as an advice business, is probably one of the more certain and scalable ways for us to add value and efficiency into the business through those workflows. And in terms of making sure that those workflows work for yourselves as advice businesses. I think we're not blind to integration beyond that point into the leading tech providers. We do that, but I guess we're sort of weighting investment across all those areas. And then lastly, I think maybe is efficiency, right? So the reality is, if you think about, going back maybe just a bit more than a decade, I think just sort of when I got into the product space at Allan Gray, I think our admin fee was 50 basis points flat. There's now a 7.5 basis point tier, and that's absolutely not possible without investing and utilizing tech into efficiency, which ultimately then ends up in clients paying less.
And we'll come on to talk about the cost of tech and who gets the ROI from that in a little bit. Daryll, your views?
Very similar to Daniel, I think it's massively important as a platform to invest in technology. I think I need to talk to Daniel afterwards about how he gets budget for 200 software developers. We're nowhere near that. But I think, clearly technology is pretty important for financial advisors. And in the recent NMG survey that was done this year, it ranks a close second to operational efficiency and service. And technology supports that operational efficiency. So most platforms are investing in the tech stack to enable efficiencies throughout the various processes. we're no different to that. Beyond the operational side of things, we also invest in things like online tools, tax and performance calculators. And we think that one of the next big sort of steps in this place is going to be around the data and how people get access to data. And so a lot of our investment currently is going into the data side to make it more accessible for advisors so that they can use the data how they see fit.
Absolutely. Elton?
Yeah, very easy to follow the two gents. I think, all on the same bandwagon. I'd like to just probably add to that I think security and trust in a system that you partner with. We talk about price and so forth, but ultimately you have to partner with someone who provides stability in their core system, that it serves a purpose in your practice. So I think that's a key foundation, and it's a scary world out there when it comes to cybersecurity and protection and compliance and all those type of things, protection of information. So, just to add on to efficiency, critically important, advice processes, supporting that through tools, etc. Same sort of thesis in our space. But then also the security of that, the stability of that system is vitally important, I think, going forward.
Yeah, absolutely. Daniel, I just want to pick up on something you mentioned, which is around integration. Mm-hmm. So how important is it that the advisors or the DFMs are integrating into your software as opposed to just using it?
Yeah. I think it's important to also qualify what we mean by integration in that instance. So, integration, arguably someone that is using our technology and accessing the data that comes from the platform and all of that, someone might say that's integration, but I think generally when we talk about integration, we're talking about, not necessarily having to come through Allan Gray portal in order to do something, whether that's from a reporting perspective or from a transactional perspective. The theory makes a whole lot of sense, of course, especially for people who are, using multiple platforms and supporting multiple platform providers. And therefore, for businesses who I think can afford to, of the size, who can afford to invest into, I guess, more sophisticated integrations from their side, as well as from the platform side in terms of building APIs, maintaining APIs, I think there's efficiencies to be had. But I would, I've just based on my experience with advice businesses and, it's definitely not for all advice businesses. I think that's important to add. I think it's very much dependent on the size of the business and, directionally where those businesses see themselves heading. If you're a smaller business, 1 or 2 person, in terms of advisory business with a bit of support staff, to go and invest into large-scale integration, I think that can become a really dangerous and expensive hole or rabbit hole to go down. And so you need to be very critical and careful of the ROI up front. I think you need to try and be very clear on that.
Mm. I remember, going back 15, 20 years where building investment platforms, you assumed the advisor would come and use your tools and that they were fully embedded in your journey, and that's what was driving efficiency. I think now the world is very different, and we know that advisors want to use the tools that fit their model best, their business best, and allowing that integration and flexibility in your journey is absolutely key. Daryll, do you get much of that kind of feedback, and how flexible are your journeys and your integration for the advisors?
Absolutely. Similar to Daniel, I think that from an advisor practice perspective, integration is incredibly complicated and difficult and costly. We've done a handful of API integrations for basic transactions, onboarding and switches and things like that, and it works well, but those are with very large corporate-styled advisor practices. I think what you're talking about is probably where the integration is going to come from, is more in the advice tech space. And, there's lots of different advice technology providers in the market now, although South Africa is quite far behind the curve on that aspect. So we follow the US market quite closely there. And technology integration between platforms and advisor technology service providers, so things like CRM providers and portfolio management providers, FNA tools and those sorts of things, that has absolutely exploded in the US today. And if you want to see something interesting, well, interesting for me, at least you go to Charles Schwab's website. They have a whole third-party integration section on their website where you can choose from, probably 100 to 150 third-party tech providers that they've integrated via API into those solutions. And so in SA, I think that's still a little bit early. I know we're going to get onto that topic just now, but I think the conversations are starting to happen, and I think that's encouraging. And the platforms that are already ready to integrate will probably be at an advantage where they can integrate.
So Elton, do you see yourself having a Glacier app store where everybody can come and integrate to individual tools?
Well, not off the shelf technically. I think integrating a total practice value proposition into your system. I think there's lots of issues to unpack in that space, but certainly we're similar to both 91 and Allan Gray. I think we've partnered with CRM providers that have significant scale in that space, that they're prominent in the industry and can integrate fully from this at phase one is client changes something, it integrates on an API basis. So technology like that I think will change, but whether we get to a point where it's apps off the shelf and fully integrating and stuff like that, I'm not so sure. I think there's still a long way to go in that space.
Okay. One of the other areas from a tech perspective that I've often heard advisors ask about is LISPs and investment platforms have mostly grown up around being based around collective investments and unit trusts. I think there is a growing demand in terms of having other product types available, structured products, ETFs, personal share portfolios, those kind of things. Do you guys see that as a direction that you need to develop your technology to allow you to offer those kind of products? Maybe Elton, start with that.
Most definitely. I think if we look at ourselves, we see ourselves as a single investment provider, not just a LISP platform. The LISP space, I think, in our world has come along significantly over the past few years when you look at the investment options that are available out there. But that's all driven through a systematic approach and a tech approach. So as new technologies arrive, and I think part of what we are currently involved with in our business is to be able to open the universe that exists out there. And the indexing space, the certificate space, the structured space, I mean, it's evolving at a rapid rate, as we heard this morning already. And, giving that optionality to intermediaries, to clients, to DFMs, making it available in one system. From our perspective, we see that as the future of this type of environment. I think if you throw the DFM into that ecosystem and the involvement there, the professionalism that is coming through and the advancement that they'll make in terms of portfolio construction and the utilization of different instruments, we believe we've got to be able to provide that and make it available to them in that space. So certainly from that perspective, I do believe that as the technologies come through, we'll see a plethora of new opportunity sets that come through in that space.
Mm. Yeah, I mean, it's tricky to build, but Daryll, do you agree?
I agree with everything Elton says. I mean, I think what you started off when you asked the question, you said that the SA market has really come from a place that was born out of the unit trust space. And so all of the systems, the core line of business systems that the LISPs use in South Africa have come from that direction, which meant that they never really catered for listed securities. If you compare that to the UK platforms, for example, a lot of those came out of the stockbroking custody type of relationships, and so they had that at the core of their systems. So, although we can offer listed instruments today through share portfolio functionality on our platform, it's rather clunky, right? It doesn't really gel so nicely with the stockbrokers in the back end because it's really a kind of a handoff to the stockbroker. What's really going to drive the take-up here is going to be a significant investment in the core systems. Once the core systems can cater for a single custody account, then it becomes much easier to offer those types of instruments. And I mean, philosophically, as a platform, what you're trying to do is you're trying to cater for advisors to offer all the types of instruments that their clients need, right? I mean, we don't want to force advisors to only use unit trust funds through the platform because they may have a client with a specific investment requirement that they can only satisfy through one of the instruments that you've mentioned. And so absolutely, I think, the direction of travel there is certainly to try and build towards that, but it's going to take quite a significant investment in the core systems to make it, scalable.
Mm. And do you think the the incumbent systems can stretch that far, or is it a case of they'll have to be thrown away, start again somewhere else?
I mean, I think there are a number of platforms that are looking or currently going through a replatforming at the back end, which is a whole other topic that we can get into at this time. And that's something that's not to be taken lightly. So stretching the core system, you can stretch it to an extent. Like, so our system, you can do share portfolios and personal share portfolios and effectively hold any listed instrument on the market today. But is it scalable on the current system? Probably not. It's the minimums are slightly higher for that because it's not a plug-and-play solution at the moment. So certain core systems, you may be able to stretch it, but you're probably going to be building ancillary systems around the core system to try and manage the complexity.
I think the short answer is yes. I envisage that continue to evolve. But what I'd add to that is we don't think about our platform as instruments and then products and then advisor tech. When we're thinking about resource allocation, we're thinking about there's a myriad of things we can do, all of which add value. And you need to be quite clear is there going to be sustainable demand from advisors? Do we believe it's going to be good for the end client? And does the business case for the platform stack up? And I guess to date, from our perspective as a business, that's other things have taken priority over catering for something like an ETF on the platform. Is that likely to change in the future? Perhaps. I think with our especially as we continue building out our offshore proposition, I think the business case and the demand for some of these instrument types globally, starts to I guess stack up.
Mm. And I think you're right to touch on the business case and the cost of these kind of future developments. And tell me, how do you internally have those discussions about investing in technology and budgets when the return on investment is not necessarily directly for your business? It's to help the advisor, it's to drive his efficiency. Do you think that the investment platforms and providers will have to bear those development costs, or do you think advisors will need to start to increase their technology spend even more? Or even the software providers, investing more in terms of integration to other technologies. Where do you think the cost of all of this has to sit?
It's an interesting question. Look, fundamentally, an intermediary runs a business, and you have to invest in your business in order to make it sustainable, in order to grow it, and create that legacy. So, I don't necessarily think that intermediaries should not think that they need to invest in technology in their practices, whatever that might be to support their value proposition. They will need that. From a platform perspective, and I mean, to your point, the budgeting is significantly difficult. The numbers are exorbitant when it comes to the spend that you have to put in there. So, again, going to an earlier point on the scale of the platform and the strength of that platform to be able to invest in technology to be sustainable, not for the next 3-5 years, but for the longer term, you really need something of substance to go that route. So, our role will always be to make sure that, our front end with an intermediary practice, we offer value in that space, whatever that value proposition from whichever platform it is. I think ultimately their efficiency should come through what we drive into their world. Yes, their advice process, their CRM system, security systems, I think, in that space. I think perhaps some intermediaries don't spend enough in that space. So ensuring that your business as an intermediary and advice giver is sound and secure, I think you've got to spend a bit of money in that space, definitely. But ultimately, I think in our world, we want to take our value proposition to the market, and we need to ensure that we spend appropriately to make sure that we're not just here for a short term, that we're around for the longer term. And, unfortunately, you need the scale to be able to do that. Otherwise, I think, boards are going to just say, absolutely not, it's just too expensive.
Yeah, I would think the who pays for what is largely dependent on who benefits from that spend. So I think obviously the platform as a core offering that it takes to market, it needs to pay for that investment, and it needs to invest the money, which is significant, into the system so that it can deliver a service to advisors. But when you talk about third-party technology providers, often we get approached by them to integrate their software into our systems, and it's difficult to determine what the ROI on that is. And often the benefit is more for the technology provider because they're able to scale their distribution of their product, and they're able to take it to more advisors and sell more of their product to advisors. And so there's a bit of a standoff there in terms of who pays that cost, and it's not always easy to determine who should pay the cost. If there's efficiency that comes through for the platform, maybe there's some more STP processes that we can pick up, then maybe it's a joint cost sharing. So I mean, I don't think there's a one right answer on that. From an advisor's perspective, it's pretty hard to understand why advisors are still not spending a lot on technology. So we do an annual survey with advisors. The number that comes up is between 10 and 15% of their expense is in technology. And we think that should be much higher. If we think about how much we're spending on technology, I think, as you mentioned, in the past, the platforms provided everything to the market. I think that's going to start changing, where advisors, particularly where they want to bespoke something for their clients, are going to start needing to dip into their pockets and start spending as well.
I mean, if you look at directionally where Consumer Duty seems to be taking the UK market in terms of the disclosures, that's very much around just being clear what someone's paying for across the value chain is no longer sufficient. You now need to substantiate what it is that you are paying for and the end client is paying for. And I know several of the platforms there are, I guess, asking themselves the same question: how much of our spend as a platform is to the benefit of the end client relative to the benefit of the financial advice business, and how does that stack up? So it's definitely a global sort of theme that I think we are applying our minds to. The US, of course, like Daryll says, with the tech, the one big advantage those providers have is just the scale of the market. If you think about the number of users, if they get a whatever share of market it is, 10, 15% share of market as a CRM there, I can't tell you what that user base looks like, but I can tell you it's a lot more than what the South African, probably the total South African market looks like. And that really is, I think, a constraint that a lot of the local software providers, the third-party software providers, are working in. They're working in a smallish market. The fee structure in the market is around a licensing fee. I don't know, again, there's a range there, but let's say it's 800 Rand a user for a software system. Again, when you look at those propositions and how much they can afford to reinvest into their offerings at the current level of spend that the advice businesses are spending at, I think there's also a question there. So I tend to concur with that. I think that there needs to be either the market needs to grow, which is not in our control, and or there needs to be a willingness to spend more into those, which will then in turn give those businesses the opportunity to, I guess, reinvest into their offerings and maybe build something that's more functional and more complete than what's probably available in the marketplace today.
Okay. I don't think I'm going to get a job at 91 because I bang on to our shareholders that we should spend a third on technology, a third on people, and a third on the rest. And I think a lot of companies have, if you're going to be a tech-led company, that's a hard thing to achieve. I think we're running out of time, so I'm going to ask one question, which hopefully means we may not sit here and just agree with ourselves for the half an hour. Hopefully it's a little bit more contentious. Based on the how we do this, from a tech perspective, there's a evergreen debate about whether you outsource the technology development or whether you build it in-house. And I know that each of you has a view on that, but maybe just give us a couple of minutes to describe the benefit of which approach you've chosen, and why you think that gives the best outcome to your investors and advisors. Elton?
Shame, Daryll, you've been stuck in the middle. I thought you could go first. But from our perspective, I think fundamentally is insourcing the how insourcing the way you want to do business with your partners. So front end, very important for us that we take ownership of that. It's your strategy, it's your value proposition, and very important that we believe very important that we are in control of that process. The back end, we don't have 200 techies either, unfortunately, a lot less than that. But there are these wonderful companies out there that have got thousands of people working that are doing this stuff every single day. And I think if you find the right partner, it's certainly something that can add value to your business. So for us, own your front end, make sure it talks to your value proposition. The back end 100% has to support that initiative. And I'll align it, just an example, to a Formula One team for those that do follow the sport. But you take the Red Bull Formula One team, best team in the world. The engine in their cars are Honda, built by Honda, spec by Honda in terms of what the requirements are from Red Bull. They design the package from an aerodynamics, systems perspective, all that type of stuff. So we'd like to see it as that sort of marriage between insource what you control and your experience that you give to your intermediary and your partner out there, outsource the back end where there's expertise. They're doing that, they're sleeping, breathing, doing that stuff every day.
I think we're similar to Elton and Glacier. Our view is that anything that touches the advisor and the client, we want ownership of. Okay, so where the advisor engages with us, principally often through the website nowadays, we decided 6 years ago to insource that. It used to be outsourced, and so we took that development team back in-house, and we wanted to build that front end. We completely rebuilt our transactional website, and it's worked for us because 90% of our of our web-capable instructions now come through our transactional website, which is fantastic. And through conversations with advisors, we're able to tailor those journeys with them so that we can sort of make it easier for them to do business with us. So I think anything that touches the client is important, the client being the advisor in our world. And the core line of business system that sits at the back, that to us is largely commoditized. That is the interface with FinSwitch to send transactions to market and to keep the client register and do the unit reconciliations. It's very little value add, I think, that one can get from that. The other piece that I think is going to become more important is around this data and getting access to data. So we're currently engaged in a massive project to also take more control over all of our data, build a sort of a unique data store that advisors can get access to, because, again, that's becoming more critical for advisors. And so, there's no right answer, I don't think, in terms of insource everything or outsource everything. I think it's a bit of a combination, and you've kind of got to pick the route that you follow as a platform to try and ultimately deliver to your client who is the advisor.
Yeah, I mean there are clear pros and cons to both in our view. And that's an important point. This isn't binary. This isn't you outsource your whole tech stack from core through to front end, and on the other end you basically start writing a first line of code and write everything yourself and have your own proprietary software. That's not true. So if I think about where we are, we just as a generalization, I'd say we absolutely don't think tech is commoditized, and I know that's not what anyone else has said here either, but we see the benefit of the control of still being in control of most of our tech stack. But that being said, we've never actually sort of approached this by saying, great, well, let's start writing something that's custom for us. When we go and say, okay, we think it's time to invest into our CRM functionality. What's the best-in-class CRM globally? And then we go and we bring that, we license it, and we bring it and we try and customize and build it and integrate it into our ecosystem. Same with our client servicing application. Same with our core system. So it's not it's really, you are still identifying software components globally that you believe are best in class and are going to serve you well as a business, and then you bring in and you integrate them. So, and that is our approach at present, and we'll be watching with close interest how the integrations and replatformings in the market go.
Okay, so last question then, and you're definitely not all allowed to agree with each other here. What is on your technology runway, and And in 5 years' time, what will people say about your tech offering to advisors? Start with Daryll this time.
There's always a hell of a lot on the technology runway. There's more than what you can actually deliver. So, big focus of ours this year has been on building out our new international platform, which hopefully, touch wood, goes live next weekend. So that's quite exciting for us. I think, the issue in the LISP environment is that you often get sort of sideswiped with regulation that comes out at you. So for the foreseeable future, the next 6 months is a big focus on two-pot, trying to get that over the line. It's a massive development for all platforms, I'm pretty sure. And so it's tricky sometimes because you have to divert resources in that direction. So what we've tried to do, the way we've structured the teams, is to try to keep a team focused on regulatory delivery so that the rest of the business can continue to focus on building out innovative products and bringing stuff to market that advisors ultimately want. So that being said, it does suck in a bit of resource, management resource and senior development resource to kind of look at how do you deliver something like two-pot. But certainly the focus for us outside of that is all around building efficiencies for advisors and trying to make their businesses more efficient. So in 5 years' time, hopefully advisors say to us that we're the easiest platform to deal with in the market. That would be a really good outcome for us.
Great. Don't we call it 5-component, not two-pot now?
Yes, we can call it that as well.
Daniel?
Yeah. I mean, we know our sort of, we know what we'd like the 5 years to look like. I think we know, but if you'd asked me 5 years ago, what would things look like today, it wouldn't have looked the same. So I think there's an element of, so I think what's really important for us is we need to resource and ensure that we've got the capabilities to prioritize and deliver what needs to be delivered and what we believe those priorities over that 5-year period look like, in a way that is reflective of our business and to a standard we want to. I mean, definitely there's going to be an investment into two-pot. I mean, I think as our platforms we all face the same challenges in that regard. So there will be a big investment into that. There'll be continued investment into our online offering, our digital offering to yourselves in terms of what we cater for from an advice process perspective, what we cater for in terms of a practice management perspective, and we'll see. I'm sure there'll be something else we've got no clue's going to hit us that's going to hit us several years down the line that we have to prioritize for as well.
Yeah, for us it's amalgamation of 3 product segments effectively. We've obviously had the traditional LISP platform. We've got a Glacier international offshore platform and our life investment single premium business. They all run off separate systems at this point in time. Accessing them is via separate systems. So over the next 5 years, we are building one interface that encompasses every single one of those, allows you to mix and match, build different types of portfolios, different types of product segments, depending on which sector you are. So I think, for us, a very exciting process, very challenging as well. But I think ultimately in terms of the solution set we want to take to market, I think it'll be extremely powerful once we can have a single spot where a client can access the diversified range of solutions that we have.
Fantastic. Well, thank you everybody for their views. I think we are now at a tea break. So please thank all my panelists for today.